Welcome back to the deep dive. It is Thursday, February 12th, 2026, and if you've tried to buy a laptop or even just upgrade your PC's RAM, heaven forbid you tried to get a high-end graphics card in the last week, you are probably in a state of shock.
Silicon shock. That's the headline, right? Everyone is running with that this morning.
It is a very, very real shock to the wallet. We're seeing prices for components that haven't moved in years suddenly just doubling overnight. And while the whole world is obsessed with NVIDIA, and I mean, rightfully so, given their dominance, we had a listener reach out with a request that I think is actually smarter.
Oh, yeah.
They want to look at the bottleneck. They want to look at the company that's actually deciding whether those NVIDIA chips can even turn on.
So we're talking about Micron technology.
We are. And the mission for today is specific. We're not just reading a spec sheet. We need to look at this from an investor's perspective. We've got a whole stack of reports here, Omdia, economic analysis from Maybank, earnings transcripts, and some fascinating supply chain data from Dananum Haber.
We've got a lot to get through. And the numbers are, well, they're honestly historic.
They really are. So here's the roadmap for this deep dive. First, we need to understand the plumbing. What is Micron actually making, and why is it suddenly so hard to produce?
Okay.
Second, we're going to look at this price spike, how a shortage of physical chips is fueling this massive spike in their bank account.
Right. The money.
And finally, the big question, ticker symbol MU. The stock is, well, it's seemingly defying gravity. Is this a bubble, or is this the new normal?
That is the multi-billion-dollar question, isn't it?
Let's start with the basics, but I want to go beyond the Wikipedia definition. I think most people hear Micron and they think memory.
Yeah.
They think of that little green stick of RAM they jammed into a laptop 10 years ago to make it run a little bit faster.
Which is true. They do make that. But basing your investment thesis on laptop RAM today is like judging Apple based on the iPod Shuffle.
Okay, right. It's part of the history, but it's not the growth engine.
It's not the growth engine.
So what is the engine?
Micron's business, it really stands on two pillars. One is NAND flash, that's your storage.
Your SSDs, that kind of thing.
Exactly. Your SSDs, your USB drives, the digital filing cabinet where data lives when the power's off. It's important, it's profitable, but it's not the star of the show right now.
The star is DRAM.
Correct. Dynamic random access memory. This is the computer's workspace. It's short-term memory.
When you open an app, it loads into DRAM.
Right. And if you don't have enough, the computer crawls. But here's the nuance. In the age of AI, crawling isn't an option.
And this is where I want to get technical for a second. We keep seeing this acronym everywhere in the research notes. HBM, high bandwidth memory. Everyone is throwing this term around. NVIDIA needs HBM, Google needs HBM. How is it physically different from the RAM in my desktop?
Okay, this is a crucial concept to grasp. Think of a standard processor like the one in your laptop as a garden hose.
A garden hose.
So turn it on, water comes out. Standard DRAM is like a bucket. It sits next to the hose and it catches the water. It works fine.
Okay, simple enough.
An AI processor, though, specifically the H100s or the new Blackwell chips from NVIDIA, that is not a garden hose.
That's a fire hose.
It is a fire hose blasting at maximum pressure. If you put a standard bucket next to it, the water just sprays everywhere. You lose data. You can't feed the processor fast enough.
So the chip is just sitting there idle, waiting for data.
Exactly. And an idle AI chip is a gigantic waste of money. So HBM is the solution.
Okay.
Instead of a bucket, think of a pressurized industrial tank system.
Yeah.
Physically, HBM is fascinating. They take memory chips, shave them down until they're microscopically thin, and then they stack them vertically.
Like pancakes.
Like pancakes, 8, 12, sometimes even 16 high.
They're literally stacking the silicon.
Yes. And then, and this is the hard part, they drill thousands of tiny holes vertically through the whole stack to connect them. They're called TSVs, or through silicon vias.
Oh.
It allows the data to travel vertically at incredible speeds.
So instead of traveling across a circuit board, the data just shoots straight up.
Precisely. It massively increases speed and capacity while using less power. But, and here is the kicker for the investor manufacturing, this is a complete nightmare.
Why is it a nightmare? I mean, we've been making chips for decades.
Because of the yield rates. If you stack 8 chips perfectly, but the 9th one have a microscopic dust particle on it.
The whole stack is useless.
The whole stack is trash. You can't just swap out the bad layer. So the yield, the number of good chips you get per silicon wafer, is much, much lower than for standard RAM. It creates a natural barrier to entry.
And this explains why Micron is so important right now. It's not just that they make memory.
Yeah.
It's that they can actually pull off this insane engineering trick.
They are one of only 3 companies in the entire world that can do this reliably. You have SK Hynix in Korea, Samsung in Korea, and Micron in the US.
And Micron's currently shipping HBM3E, moving to HBM4.
They are right at the bleeding edge.
And being the only US-based manufacturer, that has to matter, right? Given the geopolitical climate.
Oh, it matters a huge amount. The U.S. government views this as national security infrastructure now. Micron isn't just a company, they are a strategic asset.
Which explains why we're seeing them break ground on that mega fab in New York.
And the massive $24 billion expansion in Singapore that just started up in January.
$24 billion. That is the GDP of a small country.
It is. But here's the reality. Check pouring concrete takes time. Installing these EUV lithography machines takes time. You can write a check for $24 billion today.
But you're not getting a single chip out of that factory for years.
Not for years. Which brings us squarely to the silicon shock.
Right. So we have super high demand, complex manufacturing that ruins a lot of chips, and new factories that take forever to build. I'm looking at the data here from Omdia and Counterpoint Research for Q1 2026.
And the numbers are just startling.
They really are. I mean, we're used to inflation, but this. They're reporting that DRAM and NAND prices surged nearly 90% in Q1 2026 compared to the previous lows.
90% in a single quarter. That's almost unheard of in a mature market.
And for server DRAM, the stuff that cloud providers buy, it's up 60 to 70%. My question is, why? I get that HBM is hard to make, but why is the standard RAM price exploding too? Why is my laptop RAM twice as expensive all of a sudden?
This is the economic concept of crowding out, and it's probably the most important takeaway for today.
Okay.
Micron, Samsung, and SK Hynix. They have a finite amount of factory floor space. They have a finite number of clean rooms.
Right. Space is limited.
So every square foot of factory space they dedicate to making HBM for NVIDIA is a square foot that cannot make standard RAM for Dell or HP.
So they're basically cannibalizing their own production lines.
They have to. The margins on these AI chips are astronomical, so they shifted their lines. They effectively told the PC makers, sorry, we are busy making AI chips.
And suddenly, the world wakes up in January 2026 and realizes
there simply isn't enough standard DDR5 memory to go around.
So the boring stuff is in a massive shortage because everyone is chasing the exciting stuff.
Yeah, exactly. It's a cascading shortage. If you want to build a data center, you pay a premium. If you want to build a laptop, you have to fight for the scraps.
And we are seeing this hit the consumer hard. I was reading a Maybank report that mentioned PC makers like Lenovo and Dell are seeing component costs rise 10 to 30%. And I have to mention this because it was all over social media this week. The NVIDIA RTX 5090 graphics card.
The $5,000 card.
Yes. It's hitting $5,000. That is the price of a used Honda Civic.
It's wild. But if you actually look at the board, it's packed with 32, maybe 48 gigabytes of the fastest memory on Earth. That memory alone costs more than entire graphics cards used to 5 years ago.
So if I'm a gamer, I am crying right now. But if I'm holding MU stock,
you are popping champagne.
Let's look at the financials. Because this pricing power, this ability to tell customers pay up or get out, is just rocket fuel for their earnings.
It is the definition of a seller's market. Let's look at Q1 2026. Micron reported revenue of $13.64 billion.
Which beat expectations.
Handily. But, revenue is vanity. I want to look at the profit.
The gross margins.
Right. They hit a record gross margin of roughly 56.8%.
56.8% for hardware.
For hardware manufacturing. That is staggering. Usually hardware is a grind. You fight for 30, maybe 35%. 57% puts them in software territory.
So for every dollar of chips they sell, they keep 57 cents before operating costs.
And that cash is just piling up on the balance sheet.
Wow.
It is. They generated $3.9 billion in free cash flow in one quarter. And the guidance for Q2, they aren't predicting a slowdown. They're forecasting $18.7 billion in revenue.
That's a massive jump. That's not a gradual incline. That is a vertical line.
It validates the whole thesis that we are in a supercycle.
Explain that term, because supercycle always sounds a little bit like marketing fluff to me.
Well, it can be.
Yeah.
But traditionally, memory is cyclical. It's boom and bust. Prices go up, everyone gets greedy and builds too many factories, supply floods the market, prices crash, and everyone loses money for 2 years. That's been the pattern for 3 decades.
But you think this time is different.
The analysts think it's different because of the nature of the demand. In the past, Demand was driven by consumers buying PCs or phones. And that demand fluctuates,
Yeah.
right? If the economy's bad, you don't buy a new phone.
Sure, you wait a year.
But today, the demand is coming from Microsoft, Google, Meta, Amazon. They're building AI infrastructure. They are in an arms race. They cannot stop spending. If they stop buying chips, they lose the AI war. So the demand is inelastic. It doesn't care about the economy. It just cares about AI capability.
So the bust part of the cycle just keeps getting pushed further and further away.
Exactly.
Yeah.
And Micron dropped a bombshell in their earnings call that proves this. They used the phrase sold out.
I saw that. Sold out for 2024 and 2025.
Even further, they've effectively sold out their entire HBM capacity for 2024-2025 and have locked in pricing and volume for the entirety of calendar year 2026.
Wait, hold on. Let me make sure I understand that. They already know who is buying every single high-end chip they will make for the next 12 months.
Yes. The revenue is practically guaranteed. They don't have to hire a sales team right now. The chips are already spoken for.
That is incredible security for a business. But let's play devil's advocate here. We have a stock trading as of today, mid-February, around $413 to $416.
Which is a massive move.
Massive is an understatement. The 52-week low was around $61. We are looking at nearly a 7x return in a year. When I see a chart that goes straight up like that, my instinct is bubble. My instinct is get out.
That is a very healthy instinct. And the question everyone is asking is it too late?
Is it?
Well, let's look at the PE ratio, the price to earnings. When a stock runs up 600%, usually the PE gets stretched to insane levels. But because Micron's earnings, the E in PE, are growing so fast,
The ratio is actually coming down.
the valuation isn't actually that crazy. If they hit that $18.7 billion revenue target and keep those 57% margins, they're putting so much cash that the $415 price tag might actually be justified.
But trees don't grow to the sky. What stops this? What is the pin that pops the balloon?
There are two main risks. One is demand destruction. We talked about the silicon shock.
Right.
If laptops start costing $2,000 and used cars cost less than graphics cards, eventually regular people just stop buying tech.
The consumer economy grinds to a halt.
Right. If Dell and HP stop selling laptops because they're too expensive, they stop buying standard RAM from Micron. That hurts. But the current thesis is that the AI data center spending is so huge, it will offset any weakness in the consumer market.
Okay, what's the second risk? Competition.
Yes, specifically Samsung. We have to talk about the elephant in the room.
Yeah.
Samsung is the biggest memory maker in the world usually, but in this HBM race, they tripped.
The source material mentions they're struggling with yields.
They're having a very, very hard time making HBM3E without defects. They're overheating, they're failing quality checks from NVIDIA. It's frankly embarrassing for them.
So what are they doing about it?
They're pivoting. And this is a really interesting strategic move. Samsung seems to be admitting defeat on the high-end HBM for the moment. And they are shifting their massive factories back to making standard DDR5.
Ah, so they are going after the shortage we just talked about.
Precisely. They're saying, okay, Micron and SK Hynix, you guys can fight over the complicated AI stuff. We will go make an absolute fortune selling the standard chips that everyone else stopped making.
That's a smart move.
It is. But for Micron, it's actually a double-edged sword. On one hand, it clears the field. Micron has less competition for the premium AI chips.
But on the other hand,
If Samsung floods the market with standard chips, that silicon shock pricing for consumer goods might start to cool down.
so we might see a split market developing.
Well, that's my provocative thought for the future. We might see the memory market fragment into two totally different economies.
How do you mean?
Usually, memory moves as one big block. But we might see a world where AI memory, HBM, stays incredibly expensive and scarce, controlled by Micron and Hynix.
While consumer memory, DDR5, becomes a commodity again, controlled by Samsung.
Exactly.
So Micron becomes a luxury brand, essentially.
In a way, yes. They become the boutique provider of high-performance fuel for the AI revolution.
It seems like Micron is just in the Goldilocks zone right now. They have the tech, they have customers locked in for a year, and their biggest competitor is busy putting out fires in a totally different part of the market.
It's a perfect storm. They helped create the shortage by pivoting to AI, and now they are profiting from both the AI boom and the very shortage they helped create.
So bringing this all back to our listener, they wanted the investor perspective. If you had to summarize the Micron mission for 2026, how do you distill this?
The mission is execution. The hard part is done. They developed the tech, they built the strategy. Now they just have to keep the machines running. The stock reflects a company that is sold out. The risks are there, inflation, geopolitical tension. But as long as Google and Microsoft are buying GPUs, Micron is the toll booth they have to pay to get on the AI highway.
The toll booth on the AI highway, I like that.
It's a very expensive toll, but you have to pay it.
Looking toward 2027, what is the one thing you are watching?
I'm watching the sand.
The sand.
The raw materials. We talk about chips like they're magic, but they're physical objects. We are scaling production so fast that we're starting to see real constraints in the raw silicon wafers, the specialized chemicals, the energy required to run these fabs,
We're hitting the laws of physics.
and the laws of construction.
Right.
The real question for 2027 isn't who has the best chip design. The question is who can actually manufacture enough of them before the world runs out of capacity.
It's a wild thought to end on. The world's most advanced artificial intelligence comes down to how much concrete you can pour and how much water you can pump.
It always comes back to the basics.
Thank you so much for breaking this down. To our listener who requested the Micron deep dive, I hope this helps you look at that portfolio with fresh eyes. The stock chart is scary, but the fundamentals underneath it are absolutely fascinating.
It's going to be a volatile year.
Absolutely. Check your strategy, keep an eye on those RAM prices, maybe buy that laptop sooner rather than later, and we will catch you on the next deep dive.